very few people understand me in my entirety. Probably my wife is the only one. She probably understands me more than I do, to be honest. I think that's part of why I started making memes initially, was because I was like, oh, I bet this just hits like an entirely different audience and expands. And then with the podcast too, like there's a lot of people who don't use Twitter and don't read emails, but they'll get a funny meme in their Slack group chat or listen to podcasts. So I just kept thinking about expanding the circle and doing things that were kind of adjacent. Every person uses Reddit and YouTube, or YouTube and Twitter, or Reddit and LinkedIn, or they're in a bunch of group chats. Everyone probably has 1 to 3 different things. I need to just hit all these different channels and just doing things that have a high ROI and are able to do a lot of those things.
You get one idea and then you repurpose it across different channels in different formats.
Yep. And I think ultimately the thing I realized was you're building up distribution that you can lend to portfolio companies. There's a lot of VCs who build their own personal brand. And I think that's actually falling short of what you could do.
Turner, welcome to the Slice Pod, where we uncover the stories of fresh emerging managers across the early stage venture landscape. You are the founder and general partner of Banana Capital, an early stage fund investing 2 to 500K checks across many different verticals by utilizing your superpower of making memes in the Twitterverse. We'll get to what that means in a second. But before we do get to that, let's start where we always do around here, which is by asking, how did we get to this point? Was it always the plan to build your own fund? Did you always think you were going to make memes to invest in startups, or did it all just come together organically?
Yeah, I knew you asked this question first. And I was thinking, one was the point I knew I was going to start my own investment firm. The night I met my wife, we just met at the bar, started talking. She's like, what's your plan? What's your dream? And it was like, I'll probably start my own investment firm. So in a way, yeah, I guess it was always the plan. Definitely been a winding road to get there.
How does a 22-year-old at a bar start thinking about running a fund? Where did that come from?
Yeah, so I joined the investment club when I was in college. I was born in Winnipeg, Manitoba, and then moved to Grand Rapids, Michigan when I was 9 with my parents. They just separated right when we moved down here. A couple months later, my dad ended up moving back to Canada. My mom went back to school full time to get a visa to stay in the US. Couldn't technically work, so would volunteer at friends' businesses, get paid cash and gift cards under the table. She also went to school full time. She also ran her own small business. She designs custom handmade wedding gowns. Weddings are extremely overpriced, extremely expensive. You'd think, oh, this person makes wedding gowns. Like you probably make a lot of money from that. In theory, you can. She didn't. If you really do the math, someone may pay $3,000 for a custom gown, half of its material cost. Part of that was my mom not knowing how to price a product.
Well, labor as well, right?
You assume the dress costs $3,000, half of its material cost. You have $1,500 in gross margin, and then you spend 100 hours on it. You make below minimum wage, basically. You're just like an artist. So I got a front row seat to that growing up. Meanwhile, I was just a kid, middle school, high school, took a lot of programming, art and design classes, played a lot of video games, got kicked off the computers all the time in high school, for getting around the blocks to play games, teaching my friends how to do it. So I knew I would do something related to technology and the internet. I enjoyed spending my time doing that. I went to the close public state school called Grand Valley. The plan was stay at home, save money, which I ended up not doing. But so what I started doing in college, I needed a job. So I got a job in a factory assembling shelves. If you've ever been to a JCPenney or a Sears, I did that for a summer, like shelving units for retail.
That's crazy.
Yeah. Was just always kind of trying to get internships to make money throughout school. One of the internships was on like the other side of the city from where I lived. My friend was like, there's this investment club thing tonight. You want to come? I was like, it's on the way home from my internship. There's going to be free pizza. So I was like, yeah, free pizza. I never missed a meeting after that. Ended up 2 guys that stood up in my wedding. I actually met at investment club that year. One of them was actually my roommate for a while. It was just an interesting concept of like you buy a stock and it goes up and you make money. Robinhood wasn't a thing, but I'm sure I would have loved that concept of
so this was a public equity investing. Do you remember which one is the first?
It was Yahoo. So I think Marissa Mayer she was like hired to
just
come in.
Back.
And they're kind of just sitting on this massive treasure of unused traffic and they hadn't really optimized for mobile. That was the thesis of her coming in. I was like, oh yeah, that could make sense. And they also owned this thing called Alibaba. They owned, I forget if it was 40 or 20%.
20%, yeah.
And like, if you just did rough math on if this thing is worth this amount when it goes public, it's like a 2x on the whole stock. There's a floor here that's probably higher than the prices right now.
How did it transition from public investing into private investing?
The realization was like, there's a public company. No company is just created and it's a public company. I think Brad Jacobs, I think that's his name. He's the founder of, he started like 11 companies worth $1 billion or more. I think recently, this past summer, he started a shell company that was instantly a public company and worth a lot of money. Generally speaking, you don't just go, let's start a company and it's public. They get started at some point. You can invest before they go public. That's pretty interesting. And the returns are higher. If you start looking at the 7 of the 10 largest companies in the world were founded and backed with venture capital originally. Apple, Google, Nvidia, Tesla, Facebook, Amazon. Some of them could have been more, but people missed out, like, right? But all the biggest companies eventually use venture capital to start and grow. And then I realized that's actually what I'm more interested in. Like, that's way more fun. You kind of combine business, technology, investing. There's this element of treasure hunting. There's that element of trying to find the next big thing. It was just super interesting to me. I figured out it's sort of like playing a video game. The score is making money and getting a high return. Like, you can basically never beat the game. It's just like an endless game that you're always playing. So that's really interesting to me. I worked in an endowment for about 3.5 years, and you get to meet a lot of really smart people. And that was when I realized I could probably do this. So I started writing online. Initially, it was more serious stuff. Snapchat did a big redesign. They changed the messaging into an algorithmic feed. If you're looking at your email, your iMessage, it's like, what are the messages that are probably most important to you? We'll put those up top. It sounds good. People hated it. People revolted. They also redesigned the content portion of the app, which used to be stories from friends and official media publications like ESPN, Yahoo News, Complex, Vice, media companies, and they turned it into a scrollable feed like on Facebook. The other thing they did when they redesigned the messaging section, they added stories to messaging. Facebook is probably one of the highest margin, most profitable businesses of all time. Companies hook up their credit cards, and if Facebook thinks it can guarantee them a return on the ad spend, it just shows the ad. Facebook prints money. It's one of the greatest business models of all time. Snapchat was the same thing. It was just like a worse product. And people were starting to say, like, we think this company's going bankrupt. People are not using it. They're churning. Kylie Jenner tweeted, who uses Snapchat anymore? And the stock was down 20% in a day. And I was like, this is ridiculous. There was a point it was worth, I think, $5 billion. And I think today they have over $5 billion in revenue. People thought they were going bankrupt. So I started writing and tweeting about that. Then I started tweeting a lot about the day that Musical.ly rebranded to TikTok. I just remember seeing a Wall Street Journal headline about it. And first off, you're like, what's this TikTok company in the Wall Street Journal? Why is that even an article? Like, why is this relevant? So downloaded and started playing around with it. And I was like, this is the best product I've ever used. This is a better interface than Instagram. The videos are all full screen. If you think about how you scroll the Instagram feed, they waste.
This is before Reels.
They spend like half of the screen is like a white space like between the video and giving you room to put the person's username and show the likes. But like, the video is extremely small. I just kind of started playing around with it, and then you realize, wow, this company is owned by what is basically the Facebook news feed of China. And they have this insane advantage because they can operate in China and Facebook can't. With a better product, they're probably going to beat them eventually. SoftBank invested about $3 billion in ByteDance, the company that owns TikTok. They started buying tons of ad spend and trying to grow, which a lot of people thought was not going to work. My thesis from playing around was like, I just think this thing's probably going to be worth more than Facebook soon and probably going to be bigger.
You couldn't buy it on the market.
I just generally try to think about things like that. What are things that seem obvious to me that people are overlooking? You're not always right. You get a lot of stuff wrong, but I think that's kind of the point of ventures. Like, a lot of people think it's like crystal ball or bending the will of these companies because we're great investors or whatever. Yeah. You just try to find something that's probably inevitable and figure it out before anyone else. Maybe you help the founders. 0.001%. Like, you help them hire an engineer or introduce them to a customer or something, or maybe more than that, like a couple customers or a couple people that you hire. But at the end of the day, you really don't do much. Even when you're on the board, the company I'm on the board of, I do minimal. I feel like it's all very overrated how VCs talk about this stuff.
As long as things go well, boards are kind of useless. It's when things start to trend in the right direction. You kind of build this audience by posting about your research in public equities. You start getting into the private equity stuff. You start seeing through this trend of media publishing, which makes sense. That's what you're passionate about. That's what you're really good at. You're compounding your knowledge. What was the aha moment that you were like, okay, I'm ready to raise LP capital? and start placing these bets as early as I can?
The evolution of that is I came across a guy named Blake Robbins, who's a venture investor in Detroit. The name of his Medium post was like how I became a VC in the Midwest or something like that. That really resonated with me. His GP that he worked with, Jonathan Treese at Ludlow Ventures, and I realized, oh, these VCs hang out here. He had a pinned tweet that said, if I was starting in VC today or trying to get into VC and I was young, I would do a fantasy VC portfolio. Just pretend I had $1 million, invest in some companies. And so that's exactly what I did. I had met this fund, they're called Four Capital. They were just two guys at the time, Anamitra and Gaurav. Their first fund was 47 million. I think that's when I joined. This was the summer of 2019. And they were looking for an intern to help with deal flow. I'd been interviewing at a bunch of funds for like 2 years of just like, how do I get a job in VC? And at the end of the day, they're very risk averse and want to make sure you save them time and money. Those are probably the two things. And so everyone I was talking to was like, I don't have the more traditional background. I also didn't live in San Francisco, and I competed on the internet versus with my friends who worked at Uber or in my CS class at Stanford. So I didn't really compete in the same arena of like what they were trying to kind of hire from. There were just long conversations, and the four guys were like, we need help. Just like, come, you can start next week. And so I had the conversation with my wife that I was going to quit my job and work for them full time, and they'd pay me the same amount as an intern. I remember him asking, don't you have a family? Don't you have a mortgage? This is what we can pay you. I told him, I'll just drive for Uber or something. I'll figure out how to make money. I want to do this. We decided to sell the house we lived in. I had a rental property too that I sold and cashed out of just everything that I owned. So I got about a year of runway to live off of. I helped them for a summer, and then I met these two real estate guys in LA, Keith and Damien. They like 2 or 3 billion on the real estate side. They own a lot of multifamily apartments, self-storage units, trailer parks. Keith really wanted me to join and just kind of progressively like increase the intensity of the conversations to, you can stay in Michigan, you can work with us, we'll split it 3 ways. We'll raise the money from our real estate LPs. You can invest it. It was the greatest transition for me. Like literally an intern was just like a step down to like co-GP of a fund. So yeah, I joined in October of 2019. We were doing a first close of the fund, March 31st of 2020. It was a rough summer. I was doing a lot of the fundraising and reaching out to people I knew, and they were like, you should just start your own fund. I'm going to invest in your own fund when you do that.
If you look from the outside, you would think that you build this big audience within the tech Twitter sphere, and then off the back of that, you raise a fund. But it started way sooner than that. There was an intense desire from your end to actually do this. That's not that common. In the emerging manager category, we talk to a lot of folks that are operators turned VC. And so like the first thing that they tell you is like, never thought that I would be on the other side. I've been a founder, I've been an operator. I would never think that I would end up on the investing side. For you, this has been kind of a desire from the start to get that entrepreneurial drive, building it on your own from pretty much nothing. The audience came as a consequence of who you are and what you project forward into the universe, which is very interesting.
Yeah, when I did it, isn't this like a playbook? Creator economy wasn't a word. Usually you had to be sort of like an exited founder or have an IPO before you start your own fund. I just made the strategy up. I literally didn't know what I was doing. I just tried to figure this out as I go. It's sort of this survival thing of what do you have to do to make it work. Growing up, watching my mom be entrepreneurial and try to stay in the country and survive. That's the arena you've been in your whole life. That's the only thing I really know how to do. When I reflect on it, it's like you just learn to survive, do whatever it takes.
Just don't die. That's kind of rule number 1 of being an entrepreneur. Everybody, though, knows you for your memes. Like a disproportionate amount of people will know you because of the persona that you've built. In that 2020, 2021 stretch, you've built this sort of weaponization of humor. It's more about taking something to the extreme. How did that tone of voice, I would say that signature for your account came to be? And I'm assuming that was during that period of time. Originally, you were posting more serious research about public equities and everything else. As a spectator, there was a moment where things got quote unquote off the rails. And you were like, okay, let's forget about all that stuff. This can still be an outlet for me.
I grew up like a class clown. I don't take myself super seriously, but I'm serious about the stuff that I do. Creating content on the internet, burnout is a real thing and happens often. The average shelf life of an online content creator is about 7 years. I'm in about 8 doing it pretty consistently. I don't feel burnt out because I do things I'm interested in. Tweeting is like writing, and the podcast is having conversations, asking smart people questions and learning things. So I thought about it, do things I'm genuinely good at and find interesting, because you can do that forever, for 50 years. I had a friend who started and ran a pretty popular meme account on tech Twitter. I just became friends with him, started giving him ideas. There's probably a point in time where I was giving him one idea a week that he was posting. I contrasted that with the stuff I was doing, where I would spend 10 hours updating a spreadsheet, dissecting Snapchat's latest earnings and realizing it's trading at 4 times gross profit or something.
16 views.
Yeah, there was less people doing it at the time, but the audience wasn't that big. I think a lot of it is like, you want to think about competition and supply demand of interest and eyeballs. I realized I'd spend 10 hours doing this thing. I'd be up until 1 a.m. My wife would be like, what are you doing? Come to bed. And then I'd see these memes that would be the lowest IQ possible thing you could think of. They would get hundreds of thousands or millions of views. And it would be like the founder of a public company retweeted it or replied. I'd be like, that's the audience you're trying to hit when you're an investor. You want those types of people to like you, trust you, and want to work with you and take your money. So I just started experimenting with just making some memes out of my own account. And it was usually just like making fun of VCs. It was never targeting anyone individually. Sometimes it'd be a group. Like I'd make fun of Tiger Global all the time. You kind of poke fun of the unspoken truths in a way. A football team getting hyped up to go on the field, and the caption would be A16Z anytime a new social app drops. Right? People would send me screenshots of their Slack laughing about it internally. It's weird. People really resonated with it. I think if you just come out today and you're like, I'm going to make memes and shit post, a lot of people do that. So I think it's a lot of thinking about how do you counter position. I would do most serious, deepest work, non-AI related. I'd probably do something related to like in-person events. You just got to think about what no one else is doing that's unique. You can kind of like stake a claim in. What's most unique to you and authentic to you and doesn't feel like work? Because like, everything's hard. You can't just be like, oh, I'm going to work 40, maybe 35, maybe 42 hours a week and be super successful. You can be average doing that, or maybe above average. But I don't think you can not try really hard and work really hard and actually be exceptional in anything. You need to be genuinely interested in what you're doing. Otherwise, you truly will burn out and probably won't be successful. That's how I thought about all this stuff. The memes resonated with people. I think other people realized how well that it worked. A lot of people started doing it. And it got to this point where if you open up tech Twitter today, it's like half AI startup launch videos that don't actually work yet, and then half memes and shit posting.
I think it's interesting because most of those accounts, right, the praying for exits and the VC brags, are anonymous accounts.
Yeah.
You're probably one of the few, if not the only one, that actually put their face on it and is like brazen about it with the folks that you end up working with every single day. And that used to be, and still is for a lot of folks, a big no-no. You don't openly joke or make fun of your colleagues or your competition. How do you straddle the Turner that runs the pod? Very different from, Jokester on Twitter. The Turner, the manager, it's very different from the other two. Like, how do you keep straight with all these different personalities, and like how you found the people interacting with you sort of like interpret these different facets of your life?
Very few people understand me in my entirety. Probably my wife is the only one. She probably understands me more than I do, to be honest. I think that's part of why I started making memes initially, was because I was like, oh, I bet this just hits like an entirely different audience and like expands. And then with the podcast too, like there's a lot of people who don't use Twitter and don't read emails, but they'll get a funny meme in their Slack group chat or listen to podcasts. So I kept thinking about expanding the circle and doing things that were kind of adjacent. With a podcast, it's like measure once, record once, cut 10 times. Each episode I get a bunch of clips to throw up, post it all over the place, email it out. There's a lot of people who do or don't use Twitter, LinkedIn, email. I've made TikToks in the past. That's something a lot of people would know me for. Like I used to make the equivalent of memes on TikTok. Those would get anywhere from 10 to 100,000 views. There's this song, Our God is an Awesome God, and he reigns from heaven above. And there was like people, they'd be like clapping and celebrating something. I did one where I had just got done working out and I was in my bathroom. You could see the shower curtain behind me. I did a green screen on some church pews and celebrating when you're going to run out of money and Tiger just gives you a term sheet from Tiger, shows up in your inbox at 100x.
I was like, where is it going to go with this? Is it going to be Andreessen or Tiger?
I got 100,000 views on TikTok. I think that was my best TikTok ever. The audience on TikTok is very different.
There is almost no overlap between your LPs and your TikTok audience.
So I think every person uses Reddit and YouTube, or YouTube and Twitter, or Reddit and LinkedIn, or they're in a bunch of group chats. Everyone probably has 1 to 3 different things. I need to just hit all these different channels and just doing things that have a high ROI and are able to do a lot of those things.
You get one idea and then you repurpose it across different channels in different formats.
Yep. And I think ultimately the thing I realized was you're building up distribution that you can lend to portfolio companies. There's a lot of VCs who build their own personal brand. And I think that's actually falling short of what you could do. When it comes down to it, I'll tell founders, there are people that have a lot of people that follow me on the internet, but like how many of them are helping hype and get you in front of people when you're pre-launch? A lot of investors think about everything accrues to their own personal brand. I've made myself look like an idiot on the internet for 5 years. I'm perfectly fine if something I do isn't perfectly polished. And I've actually 2 or 3 portfolio companies that, they're doing decently well. I think that they're going to be huge, but they're not the Ramps or the Andurils of the world that everyone's talking about. I'll retweet them. I'll reply to them. I'll hype them up. And a lot of investors will not do that until what you prove to them.
Ceiling.
Yeah. So I think a lot about how do I build up distribution that'll benefit a founder and be able to say, I'll make sure people know about what you're doing. I think that's ultimately what early stage venture is. You're lending trust and credibility to someone. You give them some capital, but at the end of the day, let's say you take money from Sequoia or you take money from ABC Ventures, right? Someone will say, ABC Ventures, I've never heard of them. You must not be very good. Right? Versus, let's say you raise some money from a very well-known venture fund. People say, this must be a good product. They must be doing well. We should try the product. We should try to invest in the company. You're just lending that credibility to them. That's part of it. But then you also need to actually be willing to lend the credibility. It's not a fully fleshed out thesis yet. I don't think this is defensible.
Do you think people assume the core value of the fund is in the distribution, both in terms of supporting the company and deal flow? Is that what people are buying into, both the founders and the LPs?
The way I think about it is like trying to make money. Can you look at someone with a straight face and say like, this will be a 10x fund? I think that's like ultimately what you're trying to design everything towards. Anything that you do, you probably have to assume within 5 years it will be commoditized. So you always have to continue adding new things and doing things differently. Like when I opened up Twitter, I don't have the most viral meme tweets anymore, but I know all the people who do it. And a lot of them know me. You're on a text relationship with them and you can use them for help every once in a while. We'll hang out, get dinner, catch up on Zoom or whatever, like when we're in the same place. So I think it's ultimately just like building your network, building relationships with people. You're continuing to try to be at the forefront of culture, or for me, it's probably like forefront of media and attention in a way. I also don't really want to be an influencer. It kind of reluctantly happened. If you go back 10 years ago, I was trying to get a job and now I'm an influencer. I don't really think about it as how do I become more of an influencer? It's still just like, all right, what do I need to do to achieve this objective of meeting founders earlier than anyone else? And when I look at the data from my portfolio and my fund too, I was the first fund or the largest check for 78% of the portfolio. So it's like invest early and then being able to help and get the word out, I think is probably a part of it. And then you want to say, all right, do you have any good early investments? There's a popular fund admin platform that had a very popular person on it. And they told me that person was the worst, like bottom decile investor on the platform. So it's like you can get a lot of attention. You could be super popular, but if you don't make good investments, back the right founders, invest in things that become assets that you can realize returns, deliver cash back, it doesn't matter at the end of the day.
Everyone assumes that most of your deal flow comes from Twitter DMs, but it's a little bit more complicated than that. The online persona builds a network. The network is what brings the deals. Have you ever done a check just from a founder sliding in your DMs?
Probably like 10 or 20% comes from each of the following: existing portfolio company, a founder I didn't invest in, but got to know, some outbound every once in a while. Sometimes like it'll be another VC that's investing, usually like small check. I don't try to have that be a primary source of deal flow. I just don't think that's sustainable. I get a lot, but in terms of what I end up investing in, probably not a ton of that. I actually do way less outbound than most people seem to do. I've probably done a couple outbound checks in the last year or two. You need to have pretty diverse deal flow channels and sources. When Elon bought Twitter, I was like, I don't know if I can trust this as a channel. Like it might die, right? I thought it would probably actually get better and stronger.
You did?
Like it's going to crash because I think
I wanted to ask that question. Right before he bought it, like, that was like peak tech Twitter. Like everybody was home, couldn't hang out. It changed the dynamics of the landscape quite a bit. And then this massive event goes through. From your perspective, did it change things?
If you ask anyone who was on Twitter in 2020 and 2021, between then and today, they will probably tell you that it's worse. It's become like reality TV in a way, which I don't really like. But like, you just take the 3 trending topics and combine them together, do that consistently, and you'll go viral all the time. There's a question of, do you actually want to do that? One of my friends asked me, he's like, Turner, you have like 185,000 followers on Twitter. What could you do to hit 1 million followers? And he was like, trying to be insightful about it. And I was like, I'd just start tweeting about politics. And he was like, oh yeah, you're right. I was like, yeah, I really
play stupid games, like, win stupid prizes.
One part of the reason I'm starting the podcast was getting video content. Video became super important when Elon took over. He basically wants to turn it into TikTok. They're going to make more money from video than with text ads. Text is just not a good business on the internet. So it's inevitable. What are they incentivizing? Live will probably be a big thing on Twitter, which I'm not really a big fan of. You choose what you participate in based on your strengths and what you get energy from.
I can understand why live may not be great. You must have a pretty busy day doing a lot of different things, a lot of context switching. There is the whole media side of the business, portfolio management, LP, fundraising, admin and whatnot. How do you structure your day, your time? You mentioned you work really hard, and I'm sure about it. It's obvious. There is no way that you can get everything done otherwise.
They're all kind of different. I feel like I have 3 jobs or businesses. As a VC, there's probably 2: investing and fundraising. If you work at an established asset management firm, you might be an investor on the team. But there's like a marketing person, there's a investor relations person, there's a compliance person, operations person. So a lot of these times these are teams. Sometimes all my job is to write the check and go to the board meeting, and then everyone else does everything. I just have to like email like, hey, meet Lucy. She'll help you with recruiting or whatever. I do all of those things for myself and then portfolio companies. It's pretty ad hoc. From a fundraising perspective, that's a full-time job. When you're fundraising, spend a lot of time on that. My podcast has become a media company accidentally. In the past couple months, I had a friend who's like, I want to run ads on your podcast. Let me sponsor the podcast. And media businesses have pretty high margins. You probably don't want to raise venture and try to scale them super quickly, but they're really good businesses. It's kind of like the Facebook is the best business model probably of all time. It's in the same ballpark. You're hitting a single instead of a grand slam, but they can be good businesses. So that's been a pretty big thing I've been trying to figure out over the past couple of months. I start making money from the podcast. That's its own business. And that all benefits the fund too. Think of what does a traditional $20 million venture fund have to work with as an operating budget? Can you actually generate even more cash that all goes to benefit the fund at the end of the day? When I really thought about it, I was like, what am I good at? What do I enjoy doing? This is actually a pretty interesting intersection of all these things. There's a lot of different things I'm always doing. It's probably a little bit more reactionary than I'd like, just because it's just me right now. I try to stay on top of who needs help with certain things at any given time. This is super basic, but I have a draft email that I just literally keep a to-do list, and top of mind companies raising money right now, podcast reach out or need to do by the end of the week, email this person when I'm in San Francisco. So I have a trip SF in New York, and I'll add a bullet point whenever I'm planning a New York trip. When I'm meeting people, it's like, by the way, Forage is hiring. They're putting food stamps on the internet and getting into other forms of restricted government payments. It's $3 trillion that the government gives out in benefits every year. It's a big number and a big opportunity. If anyone's listening to this and they want to work at a payment processor in a restricted space that's probably going to have a strong competitive advantage, it's scaling really fast and doing really well, you should check out their careers page, joinforge.com/careers. I usually don't do a lot of meetings. I pay meetings. I don't like scheduling things because it kills the day, especially if you have them like all throughout, spread out. It's really like, hey, something comes up, let's just jump on the phone and do it right now versus trying to schedule it. So yeah, that's kind of how I do the days. It's not the smoothest and there's probably ways to improve. It's always kind of like taking it one day at a time.
I think you play a very sophisticated game across multiple tables and play fields. Do your LPs understand the sophistication and the extent of the athleticism required to do what you're doing? Or do they just see the typical iceberg, the tip that it's floating, and they're like, oh, that looks great, but they don't see everything else underneath? I think there is this giant theme in your entire career, which is curiosity for attention retention and researching information within the context of attention retention. It's the media business with the ads, the Facebooks and Snapchats of this world. And also the play that you do with your own media brand and the way that you monetize it. And I'm sure that your investments, they're not all consumer based and they're not all media businesses. You do span the gamut for sure. There is this giant theme of you as a person that is kind of like you're a student of like, how to master kind of attention retention and how do you monetize it in different ways. What are the biggest pushbacks that you get when you're fundraising? And what are the ones that are pretty obvious to people that this is a great strategy and you're the right person to execute it?
Yeah, to your point of sophistication of understanding it, honestly, I have no idea. I don't think it's that complicated personally, but maybe it is. I'm not strategically trying to piece things together and build this bulletproof business model. It's just figuring things out and experimenting with different things I think will keep you relevant and meet more interesting founders. I think that's ultimately the name of the game. There was somebody who told me, just a guy who followed me on Twitter, he's like, oh, you kind of fallen off over the last couple of years. And I was like, God damn, stab me in the heart. Yeah. But he's probably true. There's some days I don't tweet anything. I don't really try to play the zeitgeist game of like, can I perfectly position myself in between all these different topics? I think maybe pushback I get on fundraising is just like fund size is too small. That's probably a big thing. It's just finding people who are interested in the size of the strategy that I'm doing. I haven't been doing this for so long, so I don't have a lot of liquidity. I probably made a ton of mistakes in 2021. The hardest part is on a relative basis. I didn't really invest in Web3, crypto. There'd be companies raising 100 million post money with like, it should have been 10 or whatever. You'd be investing in, it's like, oh, I'm investing at 50 million post. It's like half on a relative basis. I'm doing really well. But then when you step back and look historically, you're like, it should have been 10.
Still,
I think a lot of people don't like solo GPs. I probably invest in more consumer than most people do. I'm not really trying to invest in AI. I'm not trying to invest in dev tools or consumer CPG. I have made one CPG investment. And it was one of those things I entered it as like, I don't invest in CPG. CPG is bad, right? But like, you're just trying to make money. You're trying to meet founders who are going to build a public company. And I think the bar is, can you get to $1 billion in revenue if you're investing sub 20 million posts? You try to invest as early as possible, but like it's 8 million posts and the company gets to $1 billion in revenue. I don't know how much dilution there's going to be along the way, but it'll probably be fine. And they probably won't get to $1 billion in revenue anyway. You need to find a spot where that could kind of happen and work. A lot of people think like, oh, you're just like an influencer. I definitely thought that way too. I came from more of an institutional background. And that's probably why it maybe took me so long to like really lean into it. It's just like, oh, you need to be a CFA and do asset management. VC is the least sophisticated asset class because they're just writing lottery tickets. I passed the first 2 levels of the CFA before I went into VC, and that's all about the most sophisticated institutional finance you could think of. Ultimately, everything's a spreadsheet, and you just try to predict what is the spreadsheet. You want to invest before there's a spreadsheet and in something that will create a beautiful spreadsheet with like very high multiple and generate tons of cash. If the spreadsheet is presented to you, you're not going to get a good deal. I think a lot of people don't understand podcasts. Podcast is the hardest to grow, but most valuable media platform. It's one of the reasons I started that. Because you have founders that just listen. They've listened to like every episode and they're like, I want to take your money. Some people probably don't like that I'm in Ann Arbor and not in a big market. All valid.
Because like in the neighborhood of the internet, you are as downtown as it gets. Sure, in the context of geography, you're not in the hotspot, but Silicon Valley is pretty much a state of mind at this point. It's not necessarily a physical place. If you're looking at attention retention in digital media, what is actually valuable is the real estate you've been able to amass online, and you're still growing and going for more, right? Building that podcast is like going vertical on that plot of land. Is going to be a lot more effort, but reap a lot more rewards over time. That real estate you can spend anywhere in the world. You could move to SF, but then you'd just be relevant to SF and exclusively that market. And
Yeah, and you
nowhere
spend
else.
less time on the internet. Every time I go to New York or San Francisco, I get nothing done. I'm
You
just
unplug,
meeting
yeah.
with people, and you lose the competitive advantage. Blessing and a curse, I guess. That's why I think I go once a month. I probably spend about a week a month in San Francisco, and then it's good enough, right?
Yeah,
Like, remove
totally.
yourself. You can be like, maybe not every single object needs an NFT, or maybe we aren't going to be using meme coins to buy our groceries.
Turner, what's one thing that we didn't talk about that you prepared yourself to share with the world? And I didn't ask you, and nobody's ever going to get to hear it unless you're going to read between the tea leaves of your tweets.
If you think about the tweets, a lot of people just think like, I'm going to make memes and get attention, and that's going to save my company or raise me a big fund. I think you need to think about it as a top of funnel. Attention's a top of funnel, but you need a bottom of funnel. You see a lot of startups where they'll get a lot of attention online, but there's not a good product at the bottom of the funnel, or they're not converting people to the product, or they're not able to hire people because of it. I think you need to think about it as a funnel, like the whole marketing channel. That's kind of another thing I think a lot about, and I'm actually not that good at. And that's why I think about it a lot.
Just funny you say that, because I would assume that facts prove you wrong. You're really good, but I guess you're an athlete and you always want to get better. Compared to your peer class, you're probably one of the fastest miles in the business.
It's like you're in a race, there's 8 people, you're the 6th fastest in the race, and you're like, oh man, I'm the bottom. What is that, 25%? But then it's like the 6th fastest in the world.
Yeah.
So it's just being in the arena, quote unquote, as the Chamath likes to say.
Trying things.
You're trying things, but you're aware of your shortcomings.
Yeah, for sure. This was great. I really enjoyed getting to know you
That's
better.
super fun.
I think the curse of being an influencer is that people think they know you because they see you in their feeds every day, right? But it's very different. The persona you put online is not the human you are. The GP that runs the fund is not the Twitter personality that puts out the bangers every other day. This was great. Thank you so much for dedicating some of your time. Really much appreciated. I think people know where to find you, so we're just going to leave it at that.
Hey, if you're listening to this, you probably like podcasts, so check out my podcast. Search The Peel, Turner Novak, every channel, Apple Podcast, Spotify, Twitter, YouTube.
You've just listened to another episode of Slice, the podcast for emerging managers. Thank you, Turner, for joining us, and thank you yet again, Walter, for the introduction to Turner. Next week, we have a conversation with Helen Min, former CMO of AngelList, Plaid, and Quora, who's now building an early-stage fund to back technical founders. We'll get into it next week, but make sure you're subscribed to our Substack not to miss it. We'll see you then.